this is real money, and this stuff is just fake money. And so however much of this they created, the true value of the gold is to hold your purchasing power even. And when they do those overnight revaluations, they take something that has no intrinsic value, it's only used in one place, and they revalue it against real money that's all intrinsic value because it's used in every sector of the global market. And so that's when you will see gold start to express to its true value, which is probably at least 15 grand or more, because the more debt they create, the higher the fundamental value. So in the strategy going back to the mortgages, what you'll do is when they do that overnight revaluation, that's when you grab a little bit of it and you pay that mortgage off before it gets to the point of them wanting to reset your mortgage into terms that are a whole lot less favorable to you. They don't really want to force you. They could force you, but they don't really want to do it because then you're more likely to fight back. If you think it's your fault that you're failing, just like so many people in 2008 did, then you go along with it, but you're not pointing a finger blaming anybody else. How do governments generate income? Through fees and taxation, but mostly through taxation. And so you have to have the ability to always pay your taxes. I mean, even during the Depression, you could have had your house fully paid off. But if you didn't pay your property taxes, you still lost your house. So these are the risks that real estate runs, but that you can account for with gold. I mean, I kind of like these, and I don't even know what's available. So you can't go by that with me because that's not what I do anymore. But like I have a bunch of these French roosters or Swiss francs or British sovereigns. And so we can calculate out based upon your current taxes, based upon your current mortgage, how much and what kind of gold you need to make sure that you can always cover those property taxes and pay that mortgage off like that. If you hold a stock for over a year, and don't hold me to this because I'm not a tax accountant, but I believe that your taxable event is something like 20%. But with physical gold and silver, your taxable event is 28%. So they're already doing that to incentivize you into the stock market and incentivize you away from gold because they know that that's what's going to protect you. So would they get more onerous than that? Yes. But I'm going to tell you at this juncture, I'll say a few things about it. At this juncture, I can still buy and sell these completely privately, though of course all good citizens always pay all taxes that are due. But this is a very invisible circumstance, right? And the central banks know it. That's why they don't want you to hold it, right? You hold it, you own it outright, it runs no counterparty risk. But even if they do tax you, it's not going to be 100% unless they do an overt confiscation. And they've already been doing covert confiscations since the day you and I were born. And wherever, whenever it was that you were born, they're doing it to you too. Inflation is a confiscation of your work and your wealth. They just don't want to call it a confiscation, but it is. You know, it's hard to say. This is going to last longer to make the complete transition than it is in that first shock and awe part of it. But we can look down in Venezuela and Argentina and other places to see the problems that they're having with food and how that's actually lasted, or Zimbabwe lasted for many, many years, which is why if you have the ability to grow food, that's the choice to make, because then it's just ongoing. Plus, you know, the soil, the water, everything. But as far as how long it's going to take for the whole thing, I mean, it could, you know, honestly, David, I've planned my barterable portfolio for 10 years. That's what I planned my barterable portfolio for. You know, so what's that tell you? This is not an easy transition. This is like the Industrial Revolution. We're in the digital revolution and things are changing in society, in the economy, and as well as in the financial system. This is not going to be an easy thing for anybody. It's not. It's going to be very challenging, and more so here in the US. You know, when you stop and think about it, we've held the title of the world reserve currency since the early 70s. And at that point, what that really meant was if you were a government or a corporation or certainly an individual going anywhere, like you had to convert your dollars or whatever currency you were using at that time into Zimbabwe dollars. And so in order to buy oil or lumber or steel or food or anything, you had to use US dollars. But those days started to shift in 2000. So even though it looks like it would drop off at a knife cliff, the last numbers that I saw, don't hold me to this because I don't have them right in front of me, but I believe that we're already down to something like 41% of dollars being held in reserves. And so there has essentially been a run on the dollar. What do you think would happen if Saudi Arabia realigned with and taking all the oil producing nations with them? I mean, Russia's the plus in OPEC plus. Keep in mind that the IMF has already set up what's called a substitution fund. So any country that's still holding dollar assets could make that deposit into the substitution fund, and then the IMF would wash it and convert it into an SDR denominated instrument or asset, so bond or what have you. That would accomplish a few things. Number one, if that did indeed happen, in theory, they could then regulate the rate and speed at which the dollars came home. And therefore, in theory, they could regulate the rate and speed of the new inflation coming in from that sector. We actually started buying back our own treasuries 2000, the end of 2000, and you can go on the Federal Reserve Fred, FRED, and put in their treasuries owned by the Fed, and you can see clearly when they started buying back their treasuries. So that's already been, you know, how do you go bankrupt? Slowly at first and then quickly. And that's what we're going to have here as well. And the answer is yes, I do think that you will have nobody that wants those bonds. And take a look at what's happening in the interest rate markets these days. Supposedly we got inflation under control. Well, then interest rates should not be spiking. But because they really haven't gotten interest rates under control, and the markets don't believe them anymore, and they are absolutely fighting the Fed, and every country is monetizing the debt.